Welcome, everybody. December 17th, the market update desk with Scott Riley, NMLS number 157524. Well, we lost almost all the snow that we got from the weekend here in West Michigan, so I'm kind of happy. Green Christmas is what I'm looking for. Let's go over the reports today, kind of how it affected the market, and kind of what's in store as we lead into the back half of the week. So we got the industrial production and utilization report out today, showed that the capacity and utilization report fell 0.1% in line with estimates. In November, the estimates were actually up 0.3%. Plus, in October, it was revised down to negative 0.4%. So we're seeing less utilization and capacity from factories. The bond market saw that as friendly news this morning. So we were a little bit ahead of the game this morning until later in the afternoon. Now, the factory capacity index fell from 77 to 76.8. The estimate was for that index to be at 77.3. Retail sales was the other biggie out today. That came in hotter than expected at plus 0.7% up versus the street estimate of 0.5% up. Plus, got another revision, this to the upside. October was revised up by 0.1% also. So we saw the gains that we got from industrial capacity utilization kind of erased from the retail sales. Now, when we break down this retail sales, let's look at what was up. It was really focused in one main area, took up almost half of the gains. Auto parts and sales went up by 2.6%. That was a really big jump. And online retail sales, now keep in mind that factors in Black Friday, Cyber Monday, that was up 1.8%. Some of the losers in this report were miscellaneous store retailers, bricks and mortar, were down 3.5%. Food services down 0.4%. Clothing down 0.2%. So if we stripped out the auto sales, we actually would have been less than the market was expecting. Now, the core retail sales report showed that it was up 0.4%. Now, that was in line with the market estimates. Why that's important is core retail sales funnels into GDP calculation. So that is a very important thing. Elsewhere in the world, we did see WTI crude oil fall for the second day in a row. It's now below 70 a barrel. That's great news at the pump for consumers. Also, it's good for inflation news as oil and flows through almost everything in regards to the transportation cost, production cost, and so forth. So that's actually a very big plus. Builder sentiment came out today. That came out with a index rating of 46 versus a 47. Anything below a 50 is really generally referred to as a negative viewpoint. But within this report, it did show that future sales expectations were growing. So we do see some light at the end of the tunnel, it looks like. When we look at all the different regions of the country, every region for Builders Index was actually positive except for the West. And the West makes up a lot of sales price dollars because of the elevated sales prices. So that's what's going on today. We've got the start of the Fed meeting today. We're going to have the Q&A Fed decision tomorrow, the dot plot SEP. So there's going to be a lot of analysis later as we get to tomorrow and how that's going to affect the market. So we're seeing the 10-year bond flat right now in the afternoon. Did give back a couple ticks of where we were. Mortgage-backed securities are down. We gave back a little bit. We're slightly in the red today. So senior analyst Mr. Gibson and I will be ready to roll tomorrow, crunch numbers and get them out to you. We look forward to helping you out. We always say it's a great time to buy. We see green grass out there. It's buy today. We've been talking about this for months now. Don't put it off and face all this competition that you're going to see. Give us a call, 616-293-2189. We'll help explain all that and break down the facts. not just the media or opinions. We'll give you the facts. Take care. Have a great day.